Hi there, this is Keisha, real estate agent and broker associate in Houston, Texas. I want to quickly get into how to understand property taxes. It's currently the month of April, so a lot of you all are getting your notices in the mail about your property tax values and having the opportunity to protest your taxes. So let's run through it real quick so I can just give you a little bit of basic info on what you're looking at and how to understand it. What you see on my screen currently is a profile from the Brazoria County Appraisal District's office. I just pulled up a few fields in here, a few tabs, so that I can walk you through what things mean and what it means to you when it's time to protest. So, for your specific case, you want to go to your own appraisal district's website, whether it's Fort Bend County, Harris County, Montgomery County, or Brazoria. All of them will be laid out a little differently in terms of what you see when you get in there, but the information should, for the most part, be about the same. Again, this is a profile from Brazoria County Appraisal District site. Again, go to your own county appraisal district's website for your county and pull up your file. So when you first get in there, you're just going to do a property search. You can search by address or name. Address is usually the easiest. And once you get into your record, you should see something similar to what we see here. In Brazoria County, we have a few tabs underneath the profile. So the first is property. That's going to give you basic information about the property address, the owner's name, values. We're going to spend some time looking at that, which shows how they got to the value for your home that they got to. The taxing jurisdictions, I'm going to expand that tab here in a second, but it breaks down who the taxes are paid to. Improvement just goes through what components the house has and the facts and details about that house. So land is going to break down the values of the land, and then the actual roll value shows you the values of the property over the past years. The last tab we have here is a deed history tab. There's also a current tax tab underneath that, which we don't necessarily need to get into a lot of detail. So we'll start with the values tab. This is where we see how the appraisal district has valued our property. So here it gives you the value for the actual structure itself. So home site value is going to be the value for the structure. Then you have the land value here, which shows what the land is worth. So again, structure and the land. Since we don't have any additional factors in our value, our total market value is here. We don't have any ag exemptions or anything like that, or ag use or anything like that would allow a deduction here. So this same market value is carried down to the appraised value of $372,150. Because this property has a homestead on it, which yours should also. If you're using the house as your primary residence, you definitely want to have a homestead exemption form filed with the appraisal district so that you can get the discount or the benefit of this homestead exemption. So the effect of the homestead exemption is a $72,179 discount on what you're being taxed on. So the way this is read is the value of the house is actually here, but you're being taxed on this number here because of the homestead exemption. So that's a really kind of a big thing to note. Again, if you don't have a homestead exemption, then you're going to be taxed at the value that the home is, the number that the house is actually valued at. It's also going to mean that your value can go up significantly from one year to the next. In Brazoria County, with the homestead exemption, the increase that we'll see from one year to the next is typically right around the 10% max. So if we look down here, you'll see what I'm talking about. So we have a column here for the same information we saw at the top. So we have the year here. We have the improvements for the structure, the land value here. There's no ag use on the property. So the appraised value is improvements plus land market equals appraised value here. Then they subtract what they subtract based on the homestead exemption, and the assessed value is here. Now, if you look at the differences in value from one year to the next. Let's just look at 2022 to 2023. If you do the math, which I've already done, you'll notice that the difference in these two numbers is exactly the 10% cap that they can go up from one year to the next. So they went up exactly $27,270 to get from this number to this number, which is the current assessed value. The assessed value is what you pay taxes on. Okay, so the assessed value is where they're going to calculate your taxes, and or how they're gonna the number they're gonna use to calculate your taxes with the different taxing jurisdictions. So now I've gone ahead and I've expanded the tab for the taxing jurisdictions so you can see what they are. This particular home pays taxes to several different entities, which yours will as well. So there's the county, there's the community college, there's the MUD district, there's a road and bridge fund, and then there's the school district. Typically, your MUD and your school taxes are going to be the highest, which is the case here. So this is what this person is actually paying to MUD and school tax. But if we look at the numbers and we do the math, let me get a calculator on the screen for us here. If we look at the numbers and do the math, they've labeled the taxes without exemptions. So if it were not for the homestead, this is how much this person would owe and be paying in taxes. And that number comes from this 150 rather, 150 times this total tax rate of 2.9567%. So if we did the math, you can see where that came from. 150 times the tax rate of 0.29567, which gets us the $11,003 that we see here. So without exemptions, that's what this person would pay. Now, because they have a homestead exemption, they're going to pay significantly less in taxes. And remember, this is your annual tax amount. So they're actually going to pay the $7,888.88. And that number comes from these values over here totaled. So instead of paying taxes on the 150, remember they're paying taxes on the taxable values, which are here. Now, you'll notice that the taxable value varies a little bit for each entity. So, for example, the taxable value for the drainage district is $239,977, but the taxable value for which one is this? MUD district is $284,972. Please pardon my dog. The the reason for that is each entity decides or votes on the amount of exemption they're going to give for, or the actual monetary value of the exemptions that they're going to give for each type of exemption. So with the homestead, the drainage district and the county give larger discounts than the community college and the MUD and the school district. So you'll notice that the drainage district, the county, and the road and bridge fund give a larger discount. So the taxable value is lower with them versus the MUD and the school district. So pulling up our handy dandy calculator again, if I can find the handy dandy calculator. So we pull that up again. We'll notice that most of the entities give a 20% tax break. So $299,971. A 20% tax break means that the tax value is 80%. So you're paying taxes on 80% of the taxable value. So going back to our calculator, we see that the 80% number is where that $239,977 comes from. Some of them, though, some of the entities, you're paying taxes on more than 80%. So they don't give a 20% break in your taxable value. Some give less. So whenever I'm calculating homestead, because 20% is usually kind of a safe estimate, I usually will calculate it based on a 20% discount. But again, that's a rough estimate because not every entity gives a true 20% discount. So you take this taxable value for each entity, multiply it times the tax rate here, and that's how you are able to determine how much is being paid. Oh, I'm sorry, not the tax rate here. You take it and multiply it times the applicable tax rate over here. And that's where this number comes from in estimated taxes. So to the drainage district, we pay um, 1 point, what is that? That would be like 1.4 cents on the dollar for $239,977 in value, which is where this number over here comes from. So you just multiply straight across. You skip the appraised value because it's the taxable value that you're paying taxes on. So this number tax rate for that entity times the taxable value gives you the estimated tax. If you add all of these up here, then that's where you get the $7,888.88 that are currently being paid with the exemptions that are in place. Now, for those of you who are currently getting your values and your appraisal or your protest forms in the mail currently, the important thing to remember is the more you protest and the lower you get these values down. So these, if you can keep these values down, then you ultimately pay less in taxes because your taxes that you pay are essentially a percentage of your value. So that's the importance of protesting. You are going to the county to say, I want to dispute the value that you've come up with for my property. And based on the number that you present to them, and then they may give a different number. So whatever number you all agree on for the value of your house, that's what drives how much you pay in taxes. This process, you'll have the opportunity to participate in this dispute process every year. Every year you'll get a form in the mail, and I have one down here. I haven't gotten one for this year, but it'll look something like this. I don't know if you can see, but this is kind of the one that I got in the mail for last year that kind of goes over the numbers of what they came up with. And then there's some additional forms that come with that piece of paper that tell me how to protest my taxes. For most of you, you're going to be protesting taxes based on market sales or comparable sales or appraised values of similar properties. And I'll talk a little bit more about that in a second. But again, the point of going through that process is to get the taxing or to get the value of your home down so that you ultimately pay less taxes. I also just want to clarify something. When you have your exemptions, the tax rate does not change. It's the amount that you pay taxes on that changes. Okay, so I think some there's this misconception of you pay, your tax rate gets lowered when you have exemptions, and it's not the rate itself; it's the value of the value of the property that you're paying less on. Whenever you're looking at, and just a reminder, you do have this historical information here. And whenever you're looking at your particular property, you'll have a breakdown also of what that property entails. So your square footage is here, which will come in handy when you're looking for other properties that you can use to dispute your taxes, because you want to find other properties that are similar in size and preferably similar in age. So when you're going to find other properties that you can use as a comparable, you can go into their tax records, because you can pull up tax records for anybody, your neighbors, your friends, any of that. This is public information, so you can pull this up for anybody. And when you go into this information, you want to look at other homes in your neighborhood or in the close vicinity to you that are similar in size, similar in age, and then look to see what they are, what their values look like and whether or not their values are similar to yours. And if not, you can use that as a method to protest. One thing I'll say too that I can point out here, because the you can kind of see going back to when this home was built in, clearly this home was built in 2013 because we had $0 for improvements, and then we jumped up to 170. If you have new construction, this is where this gets tricky and where you really have to watch your property taxes for the first couple of years, because with new construction, you are initially paying a very small amount of taxes the year you buy the house, because this home was built in 2013 and the value of the land was only $25,300. So remember, this tax rate stays the same. So in 2013, the taxes on this house at the land again was valued at $25,300, and the tax rate remained the same at, what was it, 29567. So the taxes were only $748 that year, as opposed to currently they're actually over $11,000. But with the homestead exemption, they're paying just under $8,000. So $750 was the tax bill in 2013, roughly. The tax rates may have changed since then, but we'll roughly say $750. And then it's gone up year over year since then. But this is where, with new construction, you have to be careful, because a lot of times when you buy your house, your initial mortgage payment is set up based on the applicable tax bill. So if this person bought their house at the beginning of 2014 and the only tax bill that was available was based on this number, which said that the taxes were $750, well, when they set up their accounts to collect for taxes each time they make a mortgage payment, they're only collecting enough money to accrue $750 at the end of the year. They haven't addressed this other $170,000 worth of value that's here. So in reality, whereas they should have been prepared to collect, let's see, the total land value was $196,030 times the 657, I think. They should have been collecting $5,800 that year. So I'll do a separate video about new construction and what that means, but I do want you to be mindful of that sometimes you're not putting enough money aside. If you have a mortgage account and they're collecting escrow for you, sometimes they're not putting enough money aside in your escrow account because they don't have all of the information for your taxes. So when you get ready to protest your taxes, what may be helpful to do, again, is just go in to your appraisal district's website, do a search. Now, before you go into the website, what I would suggest you should have done already is drive the neighborhood, find homes that look similar to yours on the outside, homes that may be a similar size, write down the address, and then go home and pull up the appraisal district's website and look up those addresses. When you look up the address, you want to see if they're similar in size, similar in age, like I mentioned before, and then see what the values are for that particular home. And if there's a significant difference, you can use those statistics, that information, as a basis to protest your taxes with the county. So I think that kind of sums it up for lesson number 1. If you have additional questions, definitely you're welcome to reach out to me and let me know, and I'll be happy to answer any questions that you have. But I hope that helps you kind of get an understanding of what's happening when you look at your taxes and you look at your tax values and you're trying to piece all of this together in order to make it make sense. Again, my name is Keisha, real estate agent in Houston, Texas. Happy to answer any questions that I can to just shed more light on this for you. Y'all have a great one.